Well, the first thing is to understand is that the bank doesn't want to foreclose. It's very costly to foreclose. It's just like a bank doesn't want a company to go into bankruptcy because there's huge costs associated with that. There are indirect costs that outweigh greatly the direct costs. So if you're in a neighborhood and one house gets foreclosed, that impacts negatively the value of all of the houses in the neighborhood. And the loans that the bank has made to those houses in the neighborhood all of a sudden become more risky. So the bank doesn't want to foreclose, for sure. So that means there's little bargaining room. So I think that basically the best way is to share this between the banks, the investors, and the government, and the homeowner. So what I advocated early on were conditional restructurings where basically you reset the principal lower, but the government gets an option to reset it higher if there's growth in that area in terms of housing prices. So you get something for it. That is called a conditional reset or cram down. I think that the only way that it would work is if it was shared rather than just looking at one particular sector. The banks really can't afford to do this. Well, if we did force it upon them, it could put a lot of banks at risk. And again, it's kind of the circle. If they're at risk, then the government's got to come in and bail them out. So that doesn't make any sense. So I think basically what my forecast is that effectively nothing's going to happen. We're just going to muddle along as we are right now. They're going to work out the legal stuff in terms of the foreclosure, and we're going to see about 1.5 trillion of foreclosures. And actually that's about what the banks have budgeted for. Maybe they're probably short a couple $100 billion, 200-300 billion in terms of my estimate versus their estimate. So I just think that we're just going to muddle along, and that's not good because housing sector is important for the economy, and housing not operational simply means that there's another reason the economy isn't operational. And I think that there's multiple reasons for that. One reason I like to point out that's not really that well understood is that the situation where you've got 40% of homeowners with a mortgage that's worth more than the house, that means they're stuck in the house. And if there's high unemployment in that area, they can't move. And that makes a huge difference because one of the great strengths of the US economy is labor mobility. Right now we don't have that mobility because of the housing crisis. And that makes this recession different than all previous recessions back to the Great Depression. And it's a very significant cost.